We now focus our attention on private equity developments in East Africa in particular. And for that discussion, I'm joined by Phil Goodwin. He is chairman at Fusion Capital. Thanks so much, Phil, for joining us this afternoon. So we've got the company having stated that it started a private equity fund dedicated to funding SMEs in the East African region in particular. Run us through the motivation behind this.
Hi, thanks for talking to me. Yeah, the motivation. Africa is one of the most interesting investment destinations in the world at the moment. I think that there are push factors and there are pull factors to that. The push factors are that it's actually quite difficult to get returns all over the world. If you look at developed economies, returns are hard to come by. And volatility is affecting investor confidence. If you go over to the East, you've got the same kind of volatility. You've got concerns about the economies there, concerns about politics. You've got extreme currency tension. I think Africa provides an alternative forum for investors to look for returns. And with the institutional improvements that have happened in Africa, particularly over the last 10 years, you've actually got some very investable markets.
Yeah. So let's take a look at that opportunity specifically, Phil. I mean, what kind of fund are you looking to leverage off here to take advantage of some of the opportunity? First of all, how much do you have to spend?
The fund is a £100 million fund. So in local currency here in Kenya, that's about 3 billion shillings, and 15 billion shillings, and we're looking at opportunities all across East Africa with that.
How much has already been earmarked?
About 20 million.
And so dedicated, as you say, through through a diverse range of countries in the East African regions. Does that span an array of sectors as well?
Yes, we invest across all sectors. We're mainly an investor in what I would call real economic activity. So we're looking at infrastructure companies, construction, development, transport, trading businesses, service companies, all kinds.
Well, certainly infrastructure, one of the bright spots right now, where we've had the World Bank estimates that sub-Saharan Africa needs more than $36 billion a year for infrastructure development. It's one thing you having the intent, another thing having the capital. How easy is it to actually come in and take control effectively of African businesses? How open has African business been to private equity? Is there a changing dynamic in that relationship?
Well, let's be clear about this. We're not the kind of investor who comes in and takes control of the company. We work in partnership with local management and with other partners in the region. So I see it as a genuine partnership and not as a takeover. Mm-hmm. And I think Africans understand the concept of partnership. You know, not every entrepreneur wants a partner, but there's a substantial proportion of them that do want a partner and welcome somebody coming in who's financially strong and who has some ideas for the business as well.
Yep. Well, that may be the case for any private equity investor. Exit options are always key, and you touched on this being a little bit of a challenge a little earlier, where when investing in African companies specifically, we've got most exchanges in Africa, not having the liquidity to absorb IPOs in excess of about $100 million. To what extent does this make you wary and hamper your investment decisions?
I think exit markets are an issue in African private equity, and we're making an act of faith that those exit markets will develop. Now, it's not blind faith, because you can see several trends which encourage you to realize that actually people are exiting their deals. The IPO market, it may not be very hot at the moment, in places like Nairobi where the market's a bit off, it's not quite the right time. But there is still a stream of IPOs coming through. And the other development here in Nairobi that we find very encouraging is the development of a junior market, which for smaller companies we can see some exit opportunities there. But the final thing I'd say about exits is that, you know, there are companies all over the world that are waking up to the fact that they should be in Africa.
Mm-hmm.
And one of the places that they target is East Africa, because it has the political system, it has the legal system, it has the financial system, and it's accessible. And so we are finding companies, major multinational companies, coming to East Africa, and they're looking for acquisitions. So I don't feel gloomy about the exit market at all, actually.